Alrighty. Yep, let's get this screen on for you guys. Um, and to be honest, similar to yesterday, I'm gonna be expecting, some type of drop down and then some type of continuation to the upside. Now, I know a lot of people come into Fridays, particularly the ones that lack context and, you know, where the real draw is on liquidity. Regarding the higher time frame, a lot of people want to see, TGIF and retracement 20% into the weekly range and whatnot. But what I'm getting at here is if we're looking at the daily time frame, right? Obviously you can all see here I have this annotated. Now, are we gonna get the Hoy up to these highs today, even with my bullish bias? I'm not 1,000%, and nor do I need it to even get anywhere close to these highs to make a lot of money today, right? So, keeping this as like our magnet on price in mind, okay, but not absolutely requiring it to be tagged. So, like if I was, like, let's say I find a buying entry and I get in here one contract, am I going to hold my entire take profit up here and just like hope and pray it gets the Hoy up there? No, that's foolish, right? So I'm either going to take partials along the way, or I'm simply just going to, probably take profits around 10 to 15 handles, right? So looking at the hourly chart, not really giving me much. And typically, if the hourly chart does not look clean to me, then I really don't have a foundation for a high probability trading setup. Meaning I'm not going to drop down to the 1 minute chart and analyze every single price fluctuation. Now, let's go down to the 15-minute chart. So, what I see here is, here's our midnight opening. We trade below that, a couple times here, comes back down, touches it once more, and we're pretty much just moving sideways. So, nothing that holds much significance to me at the moment. And honestly, this just comes with, one of the pitfalls I fell victim to early on in my journey, where it's like, shit, dude, I don't know where price action, I don't know where price is going right now. I don't know what to do. Like, I feel a little bit lost right now in price. And like, the funny thing about it is you don't need to know where price is going at like every single price fluctuation. Okay. All you need to do is wait, allow things to become clear, identify your model and price. If it performs, go ahead and take your trade. If not, then you simply just preserve capital. Now, the third option is, your model doesn't present, but then you're forcing a trade, right? So, typically the rule of thumb is the more you're like, the closer you are to your screen and the more you have to like overanalyze and look so much at the chart to like find a setup that like it's not there. It's probably not there. Okay. The best and absolute best setups and the highest probability ones are going to come from it simply just coming to you with ease and flowing to you. And you're like, it's obvious. It looks smooth to you, and everything's just coming together, and it's very, very easy to identify and see. Okay. That's the type of shit you want. You don't want to sit in front of your screen getting all close and just trying to force some type of idea, because I mean, typically when you're doing that, it's just a recipe to lose unnecessary money. Okay. Now, as I'm saying everything about ES, where obviously doesn't look too favorable, NASDAQ actually it's giving me a little bit more here. Okay, so I'm using this discount wick. I'm going to take the low to the high, and lo and behold, we're actually beautifully respecting half of it here. So we extend that out, we trade down into it. Now the key here that I'm looking at right now is us forming this swing low, and the bodies are remaining above the midpoint of this wick. So that to me would really have me expect us to have this half of the wick and the swing low here to take us above these clean highs. So it comes down to when you're in a consolidation and each side looks like too clean. So especially in ES's case, so like obviously this needs cleaned up, and obviously the highs here need cleaned up. I'm not here to be the guy to try and predict which side's going to be ran first. Okay, I just need one side to be ran first, and that's all I need to set the stage for me to really look for some type of setup, right? So now the only thing here is, as I say that, it's a bit contradicting, because yesterday I actually just so happened to call this to the tick, but it comes down to execution. And if you tried to force your will in this marketplace yesterday, you probably got your ass handed to you. But anyway, whenever we're ranging and we're obviously very extended to one direction, which obviously in this case scenario we're extended to the upside, and then we consolidate every single time we consolidate, and we still have yet to get to a higher time frame key level, which is this right here, and then the highs that I just showed you guys on the daily chart. Anytime you have that happen, okay, what you're going to expect is the price to consolidate and then trade below that consolidate, or sorry, let me backpedal here. Consolidate, trade above the consolidation. This induces dumb money to get long at a higher price. Okay, so that's the induction of longs. So once they do that, that's the perfect counterparty to now send this thing lower below all the clean lows down here with the consolidation low. And then once that has taken place, now that we're at the consolidation low, then the market is free to go to where it truly wants to go. Okay, and this, if you stick to this simple principle of whenever price is ranging in one direction and you're still bullish, have a higher time frame array, always expect this to take place. And if it does take place, it's very high probability, and you want to be a part of it, right? Now, as for today's Friday, if price continues to look like this absolute dumpster fire, then I'm obviously not going to be taking a trade. Okay, listen, another pitfall regarding specifically other streamers. Okay, they're streaming, and I'll watch them after the fact because obviously I stream every single day, Monday through Friday. But after I close up my stream, I'll go watch whoever, and it's the same exact thing with all of them. Like they stream and they think that they need to do something. They need to fuel these viewers with excitement rather than just teach them sound logic and what you usually really look for. And they think they just always are taking a trade. They just need to take a trade because they got viewers watching them, and they got courses to sell. And listen, if any streamer is watching the stream right now, which I'm pretty sure there is, at least 2 of them, just stick to what you know, okay? If you find your model, go ahead and take it in front of your viewers. If it's not there, don't fucking take the trade, okay? Because you're losing unnecessary money because you are streaming and you have that pressure of people watching you. So just relax, find your model, take the trade if you find your model, okay? And you know exactly what your model looks like, okay? Because you've traded it many, many times before. It repeats. And, if you're not finding that repeating phenomenon, then why the fuck are you trying to force a trade? Because you're just trading for trading's sake at that point, right? Now, as I continuously stream for you guys here today, I'm not sure how long I'll be here. It'll be quite some time. But I would very much appreciate it so if you guys were to run up that like button for me. So that would be nice to see. Now, not much movement here. So let's go ahead and look at the regular trading hour gap. I'm assuming it's relatively small. So, okay, so we have this regular trading hour gap left behind. And, if anyone's trying to buy right now, like I told you guys, I'm primarily bullish coming in today. Does that mean I'm going to force some type of buy off the bat? No. Typically, it's not the best move on the chessboard to buy when we have a regular trading hour gap left behind, because like 70 to 80% of the time, that's going to be worked in, at least the high of it, and then it'll look to continue. But let's take a look at NASDAQ. All right, so not much of a regular trading hour gap on NASDAQ. So here's our true day close, okay, and then here's that 9:30 opening. So that difference right there technically is our regular trading hour gap. So in that case, I wouldn't really reference it. Now, as for, let me take a look here. As for dollar index, all right. Initially, with my Discord members, the entire week we were trying to scout out and see if we can continue this bullish run and reach this premium gap. So when I say premium, I'm specifically referring to this dealing range here. Okay, so this high to the low, and then here's equilibrium. We poked above equilibrium once, failed to get to the Fourier gap, and then we come up here again, sweep this body up here. Why is that significant? Because yes, there's buy stops above the high, but technically bulk of the liquidity resides right at the body up here. Okay, so whenever we trade up, create that wick, trade off, bulk of the volume regarding liquidity is right up here. So we come up and sweep that and immediately displays lower, failing to get to that premium rate. So that to me is a very, very bearish signature. So Firstly, I want to see dollar index continue lower until we reach midpoint of the wick here. And secondly, obviously beyond the wick, if I see certain signatures that would, make me think it's continuation, I'm going to be looking at these lows down here. So back to the averages here. Still not giving me much, but I mean, the only thing I can see that, is a subtle repeating phenomenon is obviously we have the 9:30 opening here, and then it slams up. So, whenever we look at price action like this, it's a little bit tough to, be hardlined on anything right at the beginning because you really just don't have the thing that sets the stage typically for, you to be confident in taking a setup. So, with that said, it is 9:43 a.m. and we have a minor news driver coming into the marketplace at around 10 a.m. Yep. And let me double check because I think it may be orange folder. And if it's orange folder, to be honest, I don't really care about it. So let me double check. Okay, so consumer sentiment, that could be, give us some significant volatility. We'll see. Okay. Either way, particularly on a day like this, the best move is usually to, let the opening range do its thing. So the opening range is basically just the first 30 minutes from market opening. So from 9:30 to 10 a.m. That's typically what we call quote unquote amateur hour. So a lot of people, they're excited. The market opens and, this thing's moving and everyone wants to do something. And, that's a lot of times where people get stopped out. So, like I said, we do have an SMT divergence. We worked in exactly to the tick 50% of this wick here. Okay. And then we trade down to the lower quadrant in this purple shade area. And this, if you look to the left side of the chart, you'll see it's this large sell side imbalance, buy side inefficiency. So you extend that to the right side of your chart. You see you're respecting that, which is when we're bullish. That's what you would expect. Now compare and contrast NASDAQ here. So NASDAQ runs down, takes the lows. Compare and contrast this with what we see on ES. So ES nowhere near the lows, showing relative strength. Okay, so we'd expect it reasonably to, be the front runner, which it is. And yeah, beginning to gain some traction here on ES. Now it comes down to, just because the market is now moving, does that mean there is a setup or entry? Absolutely not. I mean, okay, let me backpedal again. If you see something here that suits your model and it disagrees with what I'm saying, go ahead and take that shit. All right, listen, that's the beautiful thing about trading. We can all make money doing different things. All right, it's not, one goes all. All right, so. Personally, in this price action, I do not see anything in particular that I would be so willing to be like, yes, I want to get in here and I want to put my live funds at risk. And with this price action, fuck no. I look back and I'm like, this right here is the price action I want to be, pushing significant leverage on, and which I actually did live for the Discord members on this Wednesday. It was beautiful. Okay, all the buy model that no one saw coming except for myself and my group. Okay. Now, it could come across as arrogance, but really, I mean, you can learn the same shit. So, it's not like anything is hidden here. You come to one of my streams, everything's going to be let out. There's no gatekeeping. There's none of that, come buy my course after this. Like, man. But listen, I'm going to say this one more time. This is the third time I'm getting on here, YouTube Live. And this will be the final, so it's kind of like a little trilogy, all right? Part 1, Part 2, Part 3, and I'm done, all right? I devote my life to this. I create many, many profitable traders day in and day out, and, don't take my word for it. Go ahead and look at whatever. But the fact of the matter is, like I said, I devote my life to this, so if you think I'm just going to open this up to the public every single day, you are severely mistaken, because I get many, many comments, and it's not going to happen, all right? So if you're serious about learning and you're serious about actually making real money within these marketplaces, you're gonna have to come over to the Discord. But other than that, you're with me today for free, and I'm giving it everything out. So like I said, consolidations after large ranges, we expect the sucker play. So induces buyers at a higher price, works it down, takes out sell stops, short-term discounts. So like whenever like everything I explained here, one more thing to note is like whenever these large expansions, you don't want to get your fib and be like, oh, okay, well, all right, so we have this low to this high, and I want to see. We need to see a retracement to equilibrium, right? We need a discount. I used to do the same stuff like in 2018, 2019. No, absolutely incorrect. What you really want to do is just look for that near term sell side liquidity pool and an inefficiency, because if you're coupling it with an inefficiency, a lot of times it's higher probability. So once it drives down, takes these lows that is already deemed and by book a short-term discount priced in. You do not want it to get to equilibrium of this quote-unquote range. Okay, this is actually a bearish signature. If it would have traded the whole way down here, okay, I would start looking at lower targets on the daily time frame. Okay, so whenever we're ranging and we're consolidating, this is what you look for: the nearest term liquidity pool right here, coupled with an inefficiency, and from there you expect the reversal. You do not pull your fib like this and wait for some type of retracement into a discount. Okay, that's not how that's done. One project. You know, matter of fact, I made the mistake of not doing this last time, so let me just post the link for you guys. There you go. All right, one project. I just posted it for you. There you go, brother. All right, anyway, clearly we can see the market continuously rise up following the 9:30 opening. What I see here is, number one, I mean, this doesn't look efficient to me. We traded down and we completely matched to the tick this low right here, and then from there we displace. Here's a breaker. Notice how low volatile these 1-minute candles here are on ES. It's just very range bound, and but ultimately it trades down. Right here, this up close candle, we have a low, high, lower low. And there's obviously our classic breaker, trades down into that, displaces to the upside, 1 minute fair value gap. And like I explained to you guys as soon as I got into the stream, okay? You don't, like, coming into a Friday, the first thing in your mind should not be TGIF. The very first thing I do when I come onto the charts is right at the daily time frame. Nothing is more important than the daily time frame. Ask yourself, what is this thing drawing to? Where is the nearest term liquidity inefficiency? Identify it, and in this case, it's very obviously these clean highs up here. Okay, anyone can see that. So when we come into Friday and we've been ranging, don't immediately revert your mind to, oh yeah, we're getting that retracement, baby. Listen. Stay in tune with the bullish order flow. Don't always try to go against it, okay? I did this same bullshit 2018, 19, and so on and so forth, and I learned from it, okay? But what you want to do is you expect every single daily candle to remain bullish until we reach that key draw on liquidity, which in this case would be here. So with that in mind, on Friday, obviously I would be expecting what? This candle to be bullish and remain to the upside. Now, on the contrary, there's always that off chance you could be wrong. It's very, very unrealistic to expect yourself to be right about daily bias every single day, because it's just not going to happen, nor does it need to happen for you to make a lot, and I mean a lot, of money from these markets. Okay, it's not required. Okay, it's a very important tool to use, but don't expect to be right about every single little thing, because it's number one, it's not required, like I said, to make money, and number two, no one's going to be perfect. We're all human, and but anyway. With all this said here, I don't particularly like what we're leaving behind down here. And whenever I see this, it kind of turns me away from, trying to buy in, because I feel like everyone else, that's what everyone else is trying to do. And it's just, and then you see a market like this and it's just unfavorable. And also the factor in, we're waiting for a minor news driver price coming at 10 a.m. So basically my main focus today is honestly just 10:05 to 11 a.m. today. So we shall see what that yields. And then as for dollar index, I already told you guys what I was looking for on DXY. So obviously as we're rising up here on the averages, okay, I'm looking for the midpoint of this inefficiency down here. So inefficiency, aka wick. Look, I want to see us drive down into that. And then if we show certain signatures that would reasonably expect a continuation, like I said, I'll be looking at this wick low right here, okay? Because not only is this the daily draw for dollar index and its relative equal lows. Not like that. That's not important to me right now. The most important thing is anytime I know that anytime I see, price open, wick down, leave this large wick behind, and then trade higher, a very large pool of liquidity automatically gets placed in down here, and a lot of stops are below this large wick. So whenever I see that, okay, a lot of times with the proper context, which I kind of have here, that's what I like to see swept in a beautiful fashion. So as for DXY, I mean, you take your midnight open, we consolidate, we trade above midnight opening to draw towards this volume imbalance. Take the short-term buy side here. Okay, and this sets the stage for bearish power of 3. So we accumulation, manipulation above opening to clear stops, distribution. Okay, not the most beautiful distribution you see in the world, but ultimately the signature for bearish power of 3 is there with DXY. Okay. Anyway, like I mentioned, I really want you guys to watch this regular trading hour gap down here because, like I said, if you're trying to buy with a regular trading hour gap that's unfulfilled, okay, especially whenever we have, lows that look like this down here, a lot of times it's problematic because you're kind of just opening yourself up to that coin toss of, it could continue higher here. I buy in and it could continue higher, or it can trade down to the regular trading hour gap and then continue higher. Like, that's a 50-50 gamble that I'm just not willing to take, especially when we're talking about live funds. So I'm not just, coming in here with a demo account, playing guessing games and, calling it a live stream, right? So if you want that, you can go to whoever, but it's not going to be here. So watching this tiny fair value gap in price here, I want to see what we do with that. So contrary to every single thing I said in the stream regarding bullishness and the daily draw and liquidity, a lot of times, when I'm looking for some type of, buy model to manifest itself and me to be a part of it, a lot of times it looks a lot cleaner than this. And there's very certain signatures that come together, which I cover every single day on my Discord. Very certain subtle characteristics that I look for to come together to form a high probability trade, and it's just not all there in today's context. Okay, now as I say that, please remember, and if you watch any other live stream, you will understand that things are poised to change very, very quickly, especially in an industry as such as trading. Okay, so 1 minute I'm saying I don't really like this, and all of a sudden we get this large expansion, and then all the signatures come together, and all of a sudden I'm taking a trade. Okay, so that's why whenever we're short-term trading, day trading, whatever you want to call it, you really just got to be on the ball, pay attention. Okay, and, just study price for what it is, stick to what you know. Okay, the moment you allow, so whether it's a social media influence, someone in your personal life doubting you, or some big events coming up, at all costs, please listen to me. At all costs, please do the best of your power to avoid giving in to the temptation to go outside of what you know and do more than you really can do at the moment because of those factors that I just mentioned. I see that happen so many times, more times than you could possibly think or count on one finger. And it just goes back to sticking to what you know, staying down, you come up, forever remain a student. All right. And just don't let the ego become a factor because of someone on social media or the other factors I mentioned. But anyway, what I'm seeing here is we're forming a swing low, and the bodies are respecting this small buy side imbalance. Okay. Like I said, it's one thing for me to analyze this type of stuff, and it's another thing for me to actually execute on it. So, I say this every single day on my Discord with the members. All right, the number one rule in the inner circle here: there is absolutely no signal unless you physically see the trade on my chart. Stop loss, take profit, entry, all the business. All right. Like, unless you see that there is no secret signals or, me nudging you to buy, like, none of that. Okay. Unless you physically see me take the trade, there you go. Because, like, I seriously don't understand. It's mind boggling, but that people follow this type of people. But why in the hell are you taking someone's signal that isn't taking it? Period. Or just why are they? They're trading it with demo money. Why the fuck are you taking someone's signals if they're not willing to put their own money at risk on what they're signaling to you? I mean, come on, it's ridiculous. These guys should be ashamed of themselves for even calling themselves a signal provider, and whoever is following this person should also be embarrassed. But yeah, believe it or not, that stuff goes on every single day. And if someone's not doing it live, if someone's not showing you their entry, and if they're trading fake money, like, you should immediately tune out from that person. Go find someone else. All right, doesn't have to be me, doesn't have to be whoever. Just whatever fits your personality, whatever you like, go ahead and do that. Matej. No, I never trade the Asian session. All right, that's the only session I never traded and never will trade. Okay, and the reason why is I have absolutely zero edge in the Asian session. Okay, I have zero experience with it. I don't know the signatures that perform there. Okay, I have no edge whatsoever with the Asian session. I traded the London session about 3 times in my career, and that was about the end of it. So New York session and PM session, that's all I need. So kind of just working on the heels of a small gap right here. Notice how I'm just sitting back, relaxed, and I'm not like too pressed to do something, okay? And that's exactly what you should be doing every single session, every single moment of the day. If you ever feel outside of that feeling that I just described, and you ever feel like, you're anxious coming into a session, or you just feel weak, or you feel not so, on edge, please just do yourself a service and close your laptop, go do something else, okay? Go read a book, go on a walk, I don't care. Just don't even bother trading, because all you're going to do is, inflict harm on yourself rather than, do what you're seeking to do, which is make money, okay? You're going to do the exact opposite, all right? So require yourself to have the utmost sharp mind coming into any given session in that regard. So here's our 10 o'clock news driver. Like I said, we're working on the heels of this gap. You can see it spike up there. Ravy, what's going on? So, right now you're about to witness a lot of people who are trying to buy this thing early get stopped out if they haven't already with this, which I'm sure they have. It's another great day to not be impulsive, isn't it? Or follow the crowd. So I believe we just worked in the regular trade. Nope, I stand corrected. We did not trade in the regular trade in our gap yet. So, at the very minimum, I'd like to see us touch the 9:30 opening. As you all know, the same exact thing with the 8:30 opening. That 9:30 opening acts as an absolute magnet in target and price. All right. Now, looking at it, what do we have right now? We have a large wick to the upside and a large wick to the downside. Immediately when you see that, take a large step back from your desk. Okay, sit on your hands and give this thing some time. You need to let the dust settle and then look to take your setup. Okay, if you're trying to trade in this bullshit, okay, any of this price action, if you're trying to trade in that, okay, in my opinion, that's just foolish. All right. Ravy, what's my age and what is my trading experience? I am 21 years old. I'll be 22 in a few months, and I've been trading for 5 years now. But anyway, whether it's the 5 minute, 15, 4 minute, 3 minute, 1 minute, I don't care what time frame it is. It immediately, as soon as you see a wicking sensation to both sides of the range, okay, that's a clear sign that you need to, stay vigilant, stay on your toes, and just relax. Wait, give it like at least 10 minutes. And it just comes down to the classic notion that everyone says of when excitement is high, you stay out. When excitement is low, that's whenever we're making our money and entering the marketplace. So in this context, excitement is very, very high. The market's moving, it's ranging. and I'm sure a lot of people already lost some money. Okay? And I said I'm sure, but I actually know for a fact, guaranteed 1000%, a lot of people just lost a lot of money. Now, Malik, you said the mic is low. Does that hold true for everyone, or is that just Malik? So I don't know if his volume's low, but let me know because I can certainly turn up my mic. YOLO G, please just refer to the link that I have pinned above, and you will find everything that you're seeking. Okay. Sounds fine. Okay. Thank you. Journal your trades, man. Listen, it's very, very simple. If you have an iPhone, go ahead into your Notes app, and every single trade that you take, whether it's successful or negative, what I did was simply just either took a recording or I'd screenshot it and I put it in the Notes app, and then I put all my notes right below. Okay, there you go, and then put the date on all of them. And honestly, regardless of what anyone else says, I believe the absolute number one best benefit to journaling trades is simply to come into days like this and refer back to, previous clean price action where you were actually taking the trade and it was successful, and it was a lot easier to see, because anytime you're in, anytime you reach any point of uncertainty in the charts, it's hard to, or it's very, very easy to lose yourself very, very quickly. But if you have that journal and you're simply just able to be like, all right, wait a minute, let me go back and let me refer back to price action that made a lot more sense to me. And last week there was my model that performed beautifully and I took that and it was successful. There you go. That's your blueprint to avoiding low quality price action, which we currently have underway right here. Now, just because we have currently low quality price action, does that mean that's not going to clear up in, let's say, 30 minutes? Absolutely not. Okay. It's about staying patient, relaxing, and you wanted to be a trader, right? This is the price you're going to have to pay sometimes. You're going to have to sit through it. And the most mind-boggling thing is when people think that they're not learning anything in low-quality price action, because that's actually when you learn the absolute most. Okay, because while you may not be thinking, just because you didn't get that dopamine rush and you didn't get that profit for the day, whatever, you think that you're not making any progress, when that's absolutely disgustingly untrue, because where you find yourself is within the days where you feel weak, where you feel uncertain, when you feel unmotivated, and whenever you're in price action like this and you just you're feeling that impulsive itch, and those are the exact days where you find yourself and you sharpen that psychological sword of yours, and those are the days that build profitable traders' careers. Okay, not the days where it's so easy, everyone can see the setup, everyone's in that shit, everyone's on Twitter posting up the executions, demo or real trading, I don't know what it is anymore. Those are not the days that you're learning anything. All you're doing is simply just, feeding your excitement and dopamine, right? Now, as for this price action, like I said, obviously, it's a bit of a gamble right now just because of the, we literally have a large wick on the upside and the downside, and they're both inefficient, okay? Because the algorithm absolutely refers to wicks as what? Inefficiencies. Obviously, I'm sure many of you know that. I'm not here to predict which one's which one's gonna get worked in first. Okay, I might as well just go ahead, you know, outside the room here, go grab a coin, flip it, and buy based on heads or tails or sell. So, depending on what we do here, which right now it looks like we're working in the upper end first. We'll see what I'll do with you guys here. So, it is very, very simple. There's one of two things you're going to see displayed here. Number one of three of my models that I teach every single day are going to perform, and I'm going to be in that shit, and I'm going to be making money in front of all you for the third time in a row, because my other two lives, guess what? My model performed just so happened to in the previous two lives that I had with you guys. Took it. That's it. We took the profit, got off. Today, it's the same exact thing. Nothing's changing. All right. If one of three my models perform, you're gonna be seeing the entry, stop loss, take profit. That's not financial advice. I'm not enticing you to get in there with your own money and live funds and risk that. However, you're here to witness and learn, and that's what I'm here to deliver. Now, let me finish what I was saying. So the other option is my model's not going to perform, and guess what? I'm sidelined and I'm preserving capital. Okay, and that's all I can do. And just because I have viewership, contrary to what every other live streamer is doing, does not mean I just have to fuel you with that excitement and dopamine rush of taking the trade. All right. I'm sure I will take a trade here today, though. We'll see. I'm sure my model will perform because it repeats more times than I can ever remember. I can't imagine what my old self would be trying to do with this price action right now. Honestly, I don't even think my old self would engage with this. Let me backtrack on that. Let me check on NQ. I've been on ES for some time. Alright, so ES actually completely worked in the upper end of the wick. Now we're a little bit too close to the high here. This is classic short-term engineered buy-side liquidity, so we trade up, match the wick high, where, believe it or not, a great deal of buy stops are resting above here already. As soon as we get this drop down, we leave this large wick behind. It's the same exact shit every single time. A large number of buy stops get rested above here, and then when we trade up, snap off initially, okay, they feel safe on a short-term basis, right? And that engineers more liquidity with stops going above here. We trade off, and then eventually, whenever they want to, they'll send it right above these highs here, okay? So, like I said, it worked in the upper end of the wick first. Now, this wick is very, very inefficient. And even if, like, let's say a buy model that I like performed up in here, which it's absolutely not, okay? This automatically cancels it out, okay? Number one, we have this rejection block. Number two, this very large wick is very, very inefficient. And if I was trying to buy up here, once again, I'm opening myself up to that gamble of, oh, wait a minute, okay, it might, go in my favor and continue higher, or it can come down to that wick first, right? So, if you can frame both sides of the markets, that's whenever you typically want to stay out. And if you can't frame both sides and you can only say, let's say you can only make a case for longs, well, guess what? That's high probability price action, contrary to what we're seeing here. So to be honest, anyone that's watching this, if it hurts your feelings, so be it. Being nice to someone never helped them grow. But basically, if you felt any impulse whatsoever to trade any of this today, number one, you should be taking a large step back, reevaluating yourself, and trying to get yourself right before you try to trade. And you shouldn't ever touch a fund of the account, and you shouldn't ever touch any type of live money until you get that sorted out. So. You can know all the concepts in the world, but it comes down to, can you hone in and acquire the skill set of the hardest thing in the world, which is mastering yourself and, being in complete control, right? Because most people can't do that, and that's why trading is one of the hardest, pursuits in the world. So like I said, as soon as we drop down here, okay, I have to laugh because it's the same shit every single day. Like, it matches the high, comes down. Okay, that gives those who put their stop loss above this large wick hope. on a short-term basis, and whenever they want to, they drive this thing right above the highs, like we're seeing take place right now. Okay, or maybe not quite yet. Matches it once more. Zach, would I look at yesterday's 15-minute chart between 8:45 to 12 p.m.? Would you think of those clean bodies as a likely draw? Well, let's go ahead and take a look at it. If I was bearish, and let's say every single bearish signature under the book performed for me, would I be looking? Oh yeah, absolutely. You talking about right here? Of course, yes. This right here. Okay, the fact that we got down to it here, this large wick I would use a target, and then the low. Okay, but in this case, I'm not. I don't particularly have some type of selling setup right now. But if I was bearish, then yes. And I guess it looks better on ES. So this right here would be a classic discount rejection block. But obviously we're well beyond that, and I'm not bearish. So, but yeah, to answer your question for future reference, yes. All right, so I'm seeing the same exact thing take place on ES here. We come up, match the high relatively, trade away. All right, so I'm just going to view this as a later target. That's it. So I believe we matched this high to the tick. It's honestly quite surprising that we didn't run above it, but came up, created more liquidity up here. That's all that's doing, guys. Okay, it's not some type of top and then reversal, right? It's trading up there to engineer more stops. Okay, inevitably, I'm telling you, a large amount of stops go above here every single time we come up, match highs, and trade away. All right. Now, the rule of thumb that I always stick to and tell all my members each day when I stream, basically, just take a large step back if you're feeling uncertain and look at the 5 and the 15-minute chart. If the 5 and the 15-minute chart don't look like something clear or something that you want to, you look at instantly and say, yes, that's the type of price action I want to trade in. Okay. Basically, you just really, there's really no need to go down the 1-minute chart, analyze every little fluctuation, or, try to trade. So, really, you want to demand that 15 and 5-minute time frame to be in tune with what you're looking for. Okay. So context here is we worked in the premium wick, and I would expect it to revert down to this wick. Now, it comes back down to it being a 50-50 gamble because we have a lot of engineered stops to the upside, and then we have a very inefficient wick to the downside. So, I'm not trying to be the guy here to predict that, but we absolutely can look to trade if the dust gets settled and, everything looks good after, this is all, the dirty work is finished. All I can say is if we drop down into some type of short-term discount array, these highs will be very nice, very, very nice to buy into. Meaning I'm buying somewhere down here and targeting these. And by the way, notice how I'm not in here so entry orientated and I'm trying to map out every single PD array and scribbling on my chart. Listen, you're doing yourself a disservice rather than a service. Our human minds are literally wired to think just because we're doing something that means it's progress. When in trading, especially this industry, that's just simply not the case. Okay, more times than not, doing something causes someone to become unprofitable, right? So, sidelines is a position in and of itself, all right? And basically what I was saying with me not, mapping a bunch of things out right now, it just comes down to me waiting for manipulation to be out of the marketplace, letting the dust settle, as I've said multiple times here. and then I look to reasonably analyze things. So like one of my rules is, when I'm looking at balanced price ranges, for instance. So let's say everything looked clean right now. I had a bearish bias, and we come up and we run the buy side liquidity pool. Then and only then, if we displace to the downside, then I'm only really looking at anything with significance with like a balanced price range to the left side of the chart. I'll extend that out now. But other than that, if I don't have some type of run on buy stops or, something very, very clear and, an indication that, my model's about to perform, I'm not mapping out anything. I don't need to map out anything because there's nothing in here for me to do in terms of buying or selling. All right, and there we go. Lo and behold, we have the very large pool of liquidity being ran up here. So from here, I want to see this serve as a catalyst to drop us lower. Now, in any other day in context, especially when we have the daily highs here that I mapped out in the beginning of the stream and actually the beginning of the week with all my members, it looks a lot cleaner on ES, to be honest. But anyway, anytime we have that and we have yet to reach it, okay, I'm expecting every single daily candle to remain bullish and continuously grind up into that level. With that in mind, there's a lot of things left behind here that I don't like for buying, okay? Number one, the wick. Number two, rejection block. There's a good deal of liquidity down there. And number three, if we take a look at ES, we have all the lows down here that look way, way too clean. And I already know for 1000% certainty, a lot of stops are resting below here, and this could be a potential target later on, okay? So what's key here now is basically what I was describing to you guys is a very classic, very, very classic depiction and price of not manipulation, engineered buy side liquidity. So we create that manipulation high at 10 a.m., trade away, consolidate a little bit, and then we trade up, match that high like I was explaining to you guys earlier, and then we trade away. On a short-term basis, that gives those who foolishly put their buy stop above here hope. Okay, and then from there, whenever they feel like it, in this case 10:15 a.m., slams above there, takes them all out, and from there I want to see them accumulate those stops and maybe get some distribution to the downside and finally offset all the stuff that I mapped out here. And then one more thing to consider is we have failed to get back to that regular trading hour gap. Not that, so don't be distraught. Okay, I don't always require regular trading hour gaps to be filled. Okay, there's very, very specific scenarios that I wouldn't expect them to be filled, but 70 to 80% of the time, your best bet is gonna let that thing be filled when you're bullish, and then look to take some type of buying setup. Okay. So yeah, Nasdaq took the highs as well. Let's take a look at Dow. All right, I didn't think I was gonna look at Dow today, but let's do it. All right, so Dow actually has yet to get above that 10 a.m. high. So we have both averages taking the high, and Dow kind of sitting this one out here. DXY. All right, so you're about to find out my number one rule of DXY. Okay. One of two things I'm gonna do with dollar index. If it looks clean, it's obvious to me, and I can see the signatures very, very clearly, I'm absolutely going to be referencing this the entire day and using it to frame something inversely to ES and NASDAQ to add to the probabilities if I'm taking any trade on ES or NQ. If it doesn't look clear to me, I'm simply just completely disregarding it, not looking at it whatsoever. So in this case, it doesn't look too clear to me. All we're doing is kind of consolidating after taking this low. And in that case, I don't really care about dollar index right now. All right, I'll come back to it potentially if it acts right, but for now I'm good. Go ahead and run up that like button, guys. That'll be encouraging to me. And we have 60 viewers and 15 likes, so not particularly the greatest ratio in the world, but hopefully we can get that up a little bit. Notice like all this stuff in terms of liquidity that I'm analyzing here, like as I'm doing that, we just, you take a good deep breath, a step back, and look at this through a realistic scope, and we understand that like this price action is just very very uh you know just it's just not there in terms of if you're trying to find some type of setup right now. So if you're entry orientated right now, you're probably very very frustrated. But if you understand the long term goal of and you have your weekly objectives mapped out, your daily objectives, and your realistic, grounded, whatnot, all those traits, you don't really care. You're just sitting back and relaxed, and you're just taking price for what it is, okay? And if it gives you what you want, then you'll feed off that bone and you'll make your money. But in this case, I'm absolutely not going to be engaging with any of this, as far as I'm concerned right now. Notice how also Nasdaq. Notice when we wicked down. Okay, it came down and touched. Well, not touched. It almost touched 930 opening, but my point here is it came down and matched the opening range low down here. So this would actually be a time-based liquidity pool because we have the 10 a.m. manipulation low coupled with the opening range 930 low. Okay, and that's a very very advanced interpretation of liquidity, which I could go down that rabbit hole right now, but I'm not going to do so. At least yet. So ES working on the heels of this down close candle here. Obviously, bullish institutional order flow tells me that all down close candles should be held. It's just the best example in price right now, not particularly, okay, with how we've traded. Kind of like on an upward sideways slope. So, uh, kind of like that trend line sensation going on right here. And anytime I see that, that just doesn't give me any confidence to buy into this thing because if I'm buying in tune with the trend line, then I'm simply just going against my model, right? So, looks like the push higher continues. 10 a.m. delivered us into obviously the 15-minute imbalance here. So, I mean, even if I was optimistic to, okay, we dropped down to a 15-minute imbalance. We had this order block. We had SMT divergence. We failed to take the lows down here while NASDAQ did. And then, like, even if I was optimistic to look at that and try to go against my rules and buy into this, you look at the price action down here to find an entry. And by the time you do that, you're like, oh, shit, I'm probably going to get stopped out in this, right? So I mean, all I'm seeing right now, to be honest, when you're looking at a basic view of liquidity, all I'm seeing is buy stops get continuously exhausted here. So we trade above the high here, high, and what do we have on the downside? We have obviously sell side liquidity left behind. So anytime I see that, like, if it was on the flip side, okay, my daily draw, and sell stops are exhausted, we continue taking sell stops, and we had some relative highs up here, then I would be a lot more confident right now, and I'd probably be already buying into the market by now. But patience we have, and we shall wait. Okay. Okay, so we just ran above the high here. Now the key here is, can we get significant displacement from this high? That is the kicker here. All right, so I like what I'm a little bit promising initially. Okay, this movement looks certainly a lot better than everything we've seen since 9:30 a.m. since I've been with you guys. So as mentioned, we're upsetting this small short-term trend line liquidity going on here. So our trend line sensation, I should say. So we drop down here, create the low, know the low right here, then here. 9 times out of 10, I'm going to see that be upset, and we're seeing that happen right now. So it's displacing down, attacking the initial short-term low here. So this is a lot more promising than anything we've seen this morning thus far. So we will see what this really gets to. Mike, good to see you in here, brother. Good to see you again. Always glad to help. All right, so as we can see here, we have some displacement to the downside, and we're upsetting all the short-term stops down here. So I like that, and I want to see this then continue, and I want to see us get down to here. Okay, that's what I'm looking at. That's what I'm anticipating. That's what I'm expecting. Okay, you're never going to come onto a Geekay the trader stream and see both sides mapped out. All right, it's always a one-sided thing, and one level called out. All right. Am I going to have 100% accuracy? Absolutely not. But am I going to be very, very accurate and consistent? Absolutely. So this right here will be the news raid low. Okay, so I would just put an eyeball there. Okay, and then same, so like I wouldn't want to see it like reverse at this 10 a.m. low here. Okay, I would want to see it, remain heavy, get down to this 930 low here. Now, the other thing to consider here, is there an entry point to get down to these levels I'm calling out? No, absolutely not. Okay, because we, no short-term retracement. I need at least minimum. I need some type of breaker, order blocker for a gap to be tapped up into, because I understand that smart money, while we're anticipating sales and we have a liquidity pool down below, we're looking for smart money to show its hand and show its footprints. And in that case, that would be it, trading up into some type of inefficiency or order block, and that's where they're personally taking their shorts. So whenever I'm be able to identify where they're shorting, that's obviously where I want to do so. Okay, so in this case, there's nothing for me to do here because it's just dropping straight down. All right. So let's say we open on this 1 minute candle here, we trade it down, shift it below here, we had some type of order block right here, and then we trade up into this Fairvay gap with that order block. Then yes, there's an entry point, and you put your stop loss above the high. Okay. So I put the eyeballs on the chart, and as soon as I do that, that's exactly where the market draws to. All right. And anytime you see an eyeball on Geekay the trader chart, you can go ahead and book that to be ran. So yeah, within the next minute or so, it should just really just spike down there with aggression. Okay, below this 10 a.m. low, and then opening range low. So both of the levels that I'm depicting right now, they're both time-based liquidity pools. All right. So it's not just any old low. And let's see here. There is target number 1. Boom, beautiful. And waiting on target number 2. So this initial immediate reaction off of this 10 a.m. wick low, that's very, very reasonable. Understanding that as soon as we take any type of key liquidity pool, the market is instantly flooded with orders. Okay, and that's why you're seeing it spike up like that. So we can see ES actually fail to get down to that 10 a.m. low. Okay. Another factor to actually consider here is this very large 15-minute wick left behind. A lot of times, especially my Discord members know, I like to see that worked in 25% before a continuous sell program. In NASDAQ's case, obviously we already swept the 10 a.m. low that I called out. Do I want to see it continue down here? Yes, absolutely. So what you want to do here is you want to watch this small Fairvay gap right here. Okay, this Fairvay gap right here, and then what you do is you take this very, very large wick, you take the low to the midpoint, you extend that out, and what you want to see is after we deliver from this Fairvay gap, do we expand and the bodies remain below half of this large wick? Okay, that's exactly what I would look for if I was looking to take an entry point. which obviously I'm not doing on the screen right now yet. So we have the 10 a.m. low being ran, right? And then we have ES not quite at the low yet. What makes this a fair value gap cutter? Well, we have the displacement down, okay? This very, very large candle here. When we see that, okay, we have that large candle, and we have the two candles surrounding it failing to overlap it with the wick. So whenever we close here, create this high, that's the low end of the fair value gap. And then whenever we come down here, leaves the high here, okay? That range from this candle's high to this candle's low, anything in between here is what you want to map out, the low, midpoint, and the high as reference points, okay? That is your fair value gap. So notice what we did here. So similar to how we utilized 9:30 opening, okay, you do the same exact thing with 10 a.m. opening. So you take the opening here, extend it out, all right? And in this case, if you have a lower target, which we did, and it was delivered beautifully, we trade above that opening. And what do we do above openings? We accumulate short positions, okay? And when the time is right, which in this case, we're right in the middle of the kill zone, and we ran out an intraday high, we have displacement, okay, getting back below the 10 a.m., creating this fair value gap, and now we're trading back up into it and speculating to see if we can continue to the second target here. So the 10 a.m. low was tagged, as I told you guys I would before the fact, and now it's more so hesitating, okay? Now, why exactly am I not taking a trade on the screen yet? Well, very, very simply put, I need a little bit more signatures to come together and just a few more subtle things to take place for me to actually enter the marketplace with real money, okay? So it comes down to not sitting here with a demo account and, you know, playing guessing games. But anyway, delivering off this gap, looks as if we're going to create a swing high, okay? So if we do create a swing high, I deem that as significant. Anytime we're looking at a sell program and we trade up into a gap, okay, expecting all this to stay open, we create a swing high. That to me is significant. We have yet to see a swing high yet. So once this candle closes, that'll cement a swing high. Okay, there we go. So and also you want to reference the left side of the chart. So similar to how we view a fair value gap, you can actually use this wick as an inversion. Okay, so this low to the high, you can see we're working up into the upper quadrant. All right, so I mean, literally, if you have to draw a box just like you do with the fair value gap. So same exact thing with the wick. Okay, it's no different. It's an inefficiency in price, and you would view this as inversion. So we're coming up and touching the high end, and you would look for that to act as support as we're running up into the gap. But like I said, there's several factors contributing to me not taking the trade, understanding that risk is elevated, and why. Let me show you guys something. Number one rule I taught two models to my group. I'm actually releasing the third one quite soon in the Discord, but all three models, every single one of them, there's several rules that contribute to me, you know, canceling out one of my models. And in this case, whenever we have our rejection block to the upside with large wicks above it that are unworked in, any shorting setup is absolutely, I don't give a fuck what we're seeing, is canceled out and we're not taking the setup. What we'll do is we'll wait for this to be worked in, and then the probabilities are going to be a lot better and we're going to take the short. All right. Number one rule in a Geekay the Trader stream. I already said this in the beginning, but I have to reiterate. Number one rule. There's absolutely no signal. Okay, I'm not signaling you to buy, sell, whatever the case is. Okay, I'm not signaling you to push any button unless you physically see the trade on my chart. It's not financial advice. I'm not, you know, telling you to come out and risk your live money. I'm simply studying live price with you guys and telling you exactly where these markets will go before the fact. Okay, that's it. Nothing more, nothing less. That's what I'm here to do. Okay, and devote my every day to it. So we were at least able to come down and take out the manipulation low there, which is nice to see because at the very minimum I needed to see that. With that said, continuously reference that 15 and 5 minute chart. Just look at the 15-minute chart here, okay? Is this something that you really want to come in here and just risk it all for? I don't think so, okay? Just compare and contrast this price action with Wednesday, okay? This was very, very clean, okay? Couldn't ask for a better setup, to be honest, on Wednesday. Made the group and I quite some money, to be honest. And, compare and contrast this with this, all right? So you just need to relax and wait. So what we're going to be doing here, okay, this is the game plan. What I'm going to do is we're going to sit in here until 11:10 a.m., all right? So what we're going to do is speculate the exiting portion of this 10 a.m. Time window, 10 to 11. And then we're going to look at the 10:50 to 11:10 macro, okay? And we're going to see if anything presents within there, all right? And if not, we're going to remain at the sidelines. It's another amazing day to not be impulsive. Alrighty, so lo and behold, it looks as if I can put the plug in my laptop here. Okay, there we go. Anyway, lo and behold, it looks as if we're going to be reverting to the 15-minute rejection block, which is just going to be another example of my rule being effective in the context of we don't take shorts whenever rejection blocks and for value gaps are left behind, okay? Alright, so yeah, honestly, I just expect ES to run above this high with how close proximity it's getting. So what you want to do at this moment right now, or at least what I'm doing, okay, go ahead and take this wick. You take the low to the high, map out midpoint. Okay, we already delivered that, so that's nice. That's at the very minimum. So one of two things when you're looking for a setup to the downside. You want to see midpoint of the wick worked in, or you just let the high be taken out entirely, okay? In this case, I believe ES potentially would take out the high entirely, but we'll find out. Okay, so there's midpoint. We're going to be watching what we do with this price point, and then we go to NASDAQ and do the same exact thing, all right? So at the very minimum, you want to see 25% worked in. So let's take this wick here. Here's midpoint. All right, we're just going to keep that in the chart. Notice like on the contrary, we're leaving behind a rejection block and a large wick, and that cancels out any type of upside, right? So what I'm doing is just waiting for this midpoint to be worked in, and I actually would very much so like to see the high taken out here, especially on ES. So what you want to do is watch this large for value gap in price, okay? Extend that out. And if it drops down into it, I'll just view this as reaccumulation and see it get heavy above this high here. So okay. Now let's check out ES's 15-minute. Let me see something. All right, so ES, like I said, we have SMT divergence. So Nasdaq was able to sweep that 10 a.m. time-based liquidity pool. We're reclaiming an order block. Okay, this down close candle here, very specific story behind it that makes an order block, not just some random down close candle, right? So we're reclaiming the order block, trading into this fair value gap once more. So we're also reclaiming the gap, working in what 50% of this wick, and then we slam to the upside. And if we go to it, okay, off of the SMT divergence, we see a fractal intermittent term low be formed. So while everyone's trying to short this, even though my role, and I know that this is a very low quality short, creates a fractal intermittent term low, swing low here. Do we have a higher swing low to the left? Yes. Higher swing low to the right? Yes. That's an intermittent term low. And then we displace to the upside, leaving every single gap open. No order block, no breaker, nothing. And then we get to and through the midpoint of the wick. And like I told you guys, you use wicks inversely, just like a fair value gap. So we get above it. And notice how we work on the heels of it twice and use that as support and fail to get to this fair value gap right here. And now we're gunning for the high that I said I would very much so prefer to be ran. All right. So fail to get to that gap, showing more relative strength towards this high here. And then we'll see where Nasdaq is at. All right. So yeah, Nasdaq getting ready to gun for the high as well. And there we are. Boom. Beautiful. So there's ES's high knocked out. And what you guys have witnessed here today is very, very clear and obvious manipulation and, you know, how these markets are absolutely 1000% controlled to the tick. So anyone trying to force something into this, I guarantee lost a good deal of money. But this buy model here definitely holds a lot more significance to anything else that we saw today, right? So we were able to sweep this 10 o'clock low. Okay, so time-based liquidity pool ran. ES failed to do so. ES ran above the high first. So that comes down to if you have a high probability buying setup, you always want to focus in on buying ES because ES is showing relative strength. ES failed to get below this low. So whatever average within the SMT divergence fails to get below the low, okay, that's the one you want to be buying in on because it's going to deliver your take profit faster. It's going to just deliver faster in general, okay? So yeah, I like what I'm seeing here. I believe this will set the stage for me to do something here, and we're going to find out. So now that Nasdaq took the high as well, I do believe our retracement is very much so warranted here. So pretty much just gonna wait, and you know the high was taken, the low was taken out, then the high was taken out, right? So this is a recipe for anyone that is impulsive to lose their account, and you know I believe that this is setting the stage and catalyst for a potential real setup. Now that the manipulation is out of the marketplace, so. Watching and waiting for something very, very specific to take place now with this high being ran. It's like right now, just draw it with that analogy of like I'm sitting at a tree stand waiting for that deer to come up and take my shot, right? It's the same exact thing we're trading here. Okay, we're certainly disregarding half of the order block, so if you sift through certain time frames, you'll find these two up close candles turn into one. So this entire range is one bearish order block, and the body is obviously very significant above that, and that's a very, very bullish signature. You can go ahead and just book these highs being ran. Like I said, is it going to be ran today? You know, I don't know that with 1,000% certainty, but I know this is the magnet on price, pulling price to the upside. And I know that we should remain bullish on the daily time frame, at least with the candle, until we reach this high. Okay, so do I need it to reach this high to make money? Absolutely not. Okay, but would it be nice? Yes. Alrighty, so beautiful. I really want to see it move past this gap right here. Okay, and I'm pretty much just watching that, and notice how things kind of cooled down and settled a little bit, and that's just because we ran up above the high. Market is inevitably flooded with orders, and from there, you know, it's the same exact thing. We just wait and allow the marketplace to set something up that's significant. And more specifically, rather than this 1 minute gap, what I'm going to be doing here is I'm going to be watching this large 5 minute gap was left behind. If we can remain a body below half of it, okay, that'll be the first bearish signature I look for, and then possibly engage for the lows down here. Now, that's initially what I'm thinking. Does that mean I'm going to sit here and force it? No. Okay, but if I had a gun to my head and I had to just absolutely say, you know, what I want to do right now, then that's what I'll be looking at, okay? All right, so we're dropping down as anticipated, and like I said, what you want to do is study these opposing gaps. So in this case, we just slip right past this first 5 minute gap and want to see it remain heavy through this one. So we worked in midpoint of this 15-minute premium wick. Beautiful. Okay, we have this bearish order block up here. Oops. Now, the main thing that I'm interested in as we drop down is just disregarding this down close candle. So basically, if this thing was very, very heavy and it really wanted to just really rip higher, now that we created this SMT to create this short-term buy model, it would have held this 1 minute down close candle, okay? And, you know, don't take my word for it. Just reference it in future price action, and you'll come to find that majority of these down close candles are being supported in, you know, very clear and directional buy programs. All right, so we're trading up into this 1 minute gap here after disregarding this down close candle, and we're touching 15-minute inversion wick. Okay, yes, we use wicks inversely, so we're using this one right here, half of it. Okay, extend it out. Okay, NASDAQ pretty much the same thing. Like to see us attack to the downside, like I said. And I like how we really just, you know, real quickly move past half of this initial inefficiency here on the 5 minute chart. So I'd view this right here as institutional order flow into the lower end of the bearish gap right here. Okay. And really what you want to see, if this thing is going to work, you'd want to see it leave it rather quickly. So it reclaiming it right here, that's not exactly favorable. Okay, you want to see it leave it very, very quickly. And notice how I'm not shorting it. It's just I'm not, you know, like I see the signatures, it's there, but I just need like one subtle thing that I'm having in mind right now to manifest itself. Okay, in that case, I'd be willing to pull out the real live account. So what you want to account for is how much time it's spending in this gap. So the fact that we already have three 1 minute candles spending time in here, which obviously is 3 minutes. Typically, the rule of thumb is if you really are expecting speed and you're expecting some type of sell program to perform, you don't want to see anywhere near or any more than 5 minutes spent in the gap. And in this case, this is already enough for me because we're delivering to the upside. And technically, if you look at it, this candle's low to this candle's high. That's the real fair value gap. Okay, not this. When we trade down here, we offer sell side of the curve, buy side of the curve, and then we trade down. From this low down to this high, that is a bounce, or sorry, from this low up into this fair value gap high, that right there is a bounce price range. So whenever I see us trade up into that, that's like a big giant red flag saying, hey, I think this thing might continue higher here. So delivering away from the 5 minute gap, like initially I saw it slipping beyond half of it, which is what I wanted to see. But if you look at the body, which is always most important, the body is nowhere to be found near midpoint. So significantly above that where it stands now. I mean, man, this 15-minute time frame today just looks absolutely hideous, especially on NASDAQ. I mean, just look at that. Rest in peace to all the unnecessary equity that was blown today for those that simply just could have sat out. Because, like I said, what you want every single time, I don't care what day it is, every single time when there's, price action that's, less than subpar, you go ahead and you compare and contrast it with, the last time that you had a successful trade and, it was very obvious to you, it was easy to see. And in that case, that is Wednesday. Wednesday was very obvious. The members I banked significantly. And you compare this with this, okay, and that just gives you all the more fuel to preserve your equity and save it for a day like this. Because really, this type of day, in conducting yourself well through whenever the market is ranging and subpar, where everyone else is losing money, you're relaxed and you're preserving equity. And then when it comes to a day like this where it's clean, okay, and everyone's taking it, you're the one that's making money and you're the one that's profitable, but the other ones that are taking it on this day, they're not profitable because they lost all their equity on the other days, right? So all they're doing is recouping losses, or they bought another account after blowing it and coming into this day and it's one singular profitable trade, but they can't conduct themselves through days like this or back here, and that's where unprofitability is born, okay? I always say that, but it's very, very important. Alrighty, so we actually just delivered out of that gap there. So if you take a look here, we traded to the last line of defense. We had these two up close candles, traded up into that, boom, bearish order block. Okay, these two up close candles consecutively runs us up into the rejection block here. Trades down, creates the gap. That's the story behind these two up close candles. That is a bearish order block, not just some random up close candle before the down move. Okay, you're being supplied that as a lie by a lot of quote unquote influencers, and you're just learning the wrong information. All right, very, very simply put. So what I'm looking at here now, like I said, I expect us to form some type of sell program, and I really want to see us revert down to the wicks here and the lows, okay? Because it's, I think it's overdue with how we traded today, and now that I'm looking at it, like I really didn't want to see this gap delivered. Okay, I see this gap delivered, and a lot of times that turns me away. Why? Because we trade up, offer buy side of the curve, trade down, offer sell side of the curve, leaves the gap that should be left open. Okay, there's no need for it to trade back up in here if it's bearish. All right. Yes, it's a fair value gap. Like, oh, wait a minute, but it's a fair value gap. It should trade up and no before it goes lower, right? Not in this context here. Okay, whenever it offers buy side of the curve, sell side of the curve, it should leave it and not come back to it. Okay, it's like a car revving up and it's really in a hurry to get somewhere and it really wants to get to this key point, and then it skirts off and it creates those black lines. You think it's going to come back to those black lines and feel them, come back just to the black lines just for whatever sake, right? No, it's going right to the fuck where they want to go, right to that. They're in a hurry. They want to get to that wherever they need to go, right? So it's the same exact thing with price here. Man, where the hell would I ever be if I didn't learn how to navigate through days like this? I would certainly not be here, and I certainly would have never amounted to anything in this industry. But lo and behold, I stuck through it. 5 years, 5 years of this shit, guys. You're sitting through. You're telling me you can't sit through one subpar day, where it's not so obvious and it's a little, you know, little iffy. You're telling me you can't sit through one day and you're expecting to be profitable. I mean, that's just laughable. All right. Experience is the name of the game here. It's the number one thing that's going to push you to success. And if you're not willing to submit to the time that is required and push through those growing pains, the mental growing pains, then I just don't know what to tell you. This just simply is not the industry for you. I'm sorry, but anyway, very much so ranging. I mean, it'd be foolish for me to expect some type of reversal here. Okay, we're just consolidating, and it very may well just trade above the highs here now. So if you go back and rewind the stream, which you should, in the previous two where I actually did take trades live in front of you guys, that has yet to be seen yet today, of course, because I told you guys at the very beginning of the stream, listen up. I said it. I have one of three models. If I see one of three of them conducted with any given price swing in today's price action, you're going to see me physically put my entry, stop loss, take profit, all that shit, okay? If it doesn't perform, well, we're going to go for the other option, and that is capital preservation and sitting on the sidelines. In this case, you can rewind the tape if you're curious. I do prefer ES to NASDAQ just slightly here today, just based on how it moved and how it's looking on the 15-minute chart. Like I said, like if I just come into a session, so let's say I didn't look at price at all today, and I have no idea what it did. As soon as I come into a session like this, okay, and let's say I just drop right to the 15-minute time frame, I mean, the only thing I can look at here is consider the sell side down here. That's the only thing I really can do at this point, because me buying up here with all this down here, it just simply does not supply me with any type of refined edge, right? And if I don't have an edge, well, guess what? I'm just simply gambling, okay? And what might be gambling to me might not be gambling to you, okay? So we all have our different edges. But as long as you're sticking to what gives you the edge to become profitable, then that's fine, okay? But if you're going outside what you know, and you try to, go for the new shiny object on Twitter or whatever else, I don't know anymore. Listen, but stick to what you know, okay? Stick to your model, and that's it. And it sounds like very, very, very simple stuff that I'm endorsing, but it's the hard part about it is actually applying it with consistency. And if you could do that, which most people can't, well, you're gonna be a step closer to making unimaginable amount of money from these markets. So like I said, guys, this is a part 3 to a episode 3, and this is the final time I'll be live on YouTube. Okay, the rest of it's gonna stick to Discord, but this is the third and final. All right, I was able to take I was able to take trades on the 2 previous streams that I gave you guys countless gems as well. And here on the 3rd one, I'm very much so hoping I can end it out with a trade as well, whether it's successful or not. But like I said, contrary to the other streamers, I'm simply not going to force an idea just for viewership's sake, okay? So really just consolidating within this bearish gap that was formed. So just going to continuously monitor this here. And yeah, it's 11:05 a.m. here. So typically, what turns me away at the end of the session when we're talking about the kill zone, which is where 90% of my trades are taken. Okay, the other 10%, or maybe let me backtrack on that. I'd say about 70% of my trades are taken in the New York session and about 30% in their PM. Okay, but whenever we head into the 1050 macro, okay, we understand there's 1 or 2 things that's going to take place. The first thing is, some type of a reversal in the direction of liquidity. So in this case, it's down here. Also, not only do we have a time-based liquidity pool down here, one more thing to consider is just, take a line wherever you got to do and look at this. Okay, it's a little trend line sensation going on here. And, like I explained with this here, whenever I told you guys where it's going to go before the fact and upset this, same exact thing here. Okay, 9 times out of 10, you'll see this be upset, but eventually. But anyway, what I'm getting at here is the macro is going to do 1 of 2 things. It's going to create a reversal in the direction of the liquidity pool, or it's going to have a continuation. So let's say we already ramped down here, took the liquidity, whatnot, and then we formed a buy model, and we're up here somewhere, and then we're entering the 1050 to 1110 macro. Then in that case, I'll look for continuation. So I'll look for a retracement with the macro, and then I'd be buying in on that 1050 to 1110, and aiming for new highs. Okay, so 1 of 2 scenarios that would play out with any given macro there. So I'm sorry, a lot of lies out there. Okay, the only macro in price is 10 minutes before the hour and 10 minutes after. Okay, Hydra, I'm sure you're watching. I'm sorry, I love you, but there absolutely is no 920 or 920 to 940, whatever it is, macro. Okay, the only exception to 10 minutes before the hour and 10 minutes after is the final hour macro, where it's 315 to 345. Okay. Zach, what would I do differently if I had to start over? Well, to be completely honest and straightforward with you, I wouldn't do anything differently because I'm exactly where I want to be. I mean, if that sounds arrogant to you, I mean, that's whatever, but I'm exactly where I wanted to be, and I've attained everything that I wanted, and within these markets. So I honestly wouldn't do anything differently, okay? So any bad thing that happened a part of the journey is what made me who I am today. So I can't backtrack on that and say I would have done it differently. Now, with that said, I definitely had an advantage early on. Very, very blessed, and that I was pointed in the right direction very early on in my trading journey. So that definitely was a bonus, and I was very, very lucky, but unfortunate. But other than that, yeah, I wouldn't do anything differently, man. Like very, very grateful for what I was able to attain. So like I said, like we just can't slip beyond this. This here is, let me go back. Okay, so on the left side of the chart, you're gonna find this premium hourly for value gap, and that's extended out to the right side of the chart. And we always extend this out. We always extend your higher time frame levels to the right side of the chart as long as we're still continuously trading through to and through them. Okay, so going back to the lower time frames. Okay, this is that green shaded area that I'm referring to. So we trade down to it here, here, and here, and we're not able to pierce through that upper 75% yet. So until I see that, I really don't have anything. Continuously consolidating through this. So I don't believe there's any wicks left behind there, so that is one less worry that I would have to have. Now, keep in mind, this opening right here, okay, don't even worry about the wick. This opening right here, any tick below this right here, that is going to be rocket fuel, absolute rocket fuel to send us below these lows, because this right here, one tick below, that is going to be our changes in state of delivery, and from changes in the state of delivery, what is the purpose of changes in state of delivery? Well, following it, maybe we have a short-term retracement, and then we seek sell stops, sell stops, sell stops, sell stops. That is what serves as a result of changes in the state of delivery. That's the only purpose for changes in the state of delivery, to seek liquidity following them, okay? As for NASDAQ, okay, we just worked in this wick here on the premium wick, beautiful. Okay, 5-minute time frame, rejection block swept. Okay, not bad. We have a small crack in correlation here too as well. So ES came up and failed to take this high. Okay, kind of left these intact. And then NASDAQ obviously took the highs here internally. So small little crack in correlation there. Jay Leo, thank you for asking, man. How's the baby? It's amazing. It's great. I love it. Almost 3 weeks old now. It's kind of crazy, but already getting too old. Greatest gift I ever received. Okay, by far. So listen, guys. I mean, the number one reason I do these streams is to point people in the right direction and veer them away from the stuff that I used to do that hindered me from actually making real money. And what I'm really getting at here, and just to get straight to the point, is on days like this is the type of days that I'll lose myself, and I would really just lose more money than I really should just by trying to do something and force a trade, right? So I'd lose a lot of significant equity back then. And then, like I said, I keep repeating the same notion, but it's important. We get to a day like Wednesday where it was obvious, very, very clean, directional, okay, this, that, and the third. But when we get to a day like that, okay, then I'm like, oh man, like I should have waited for this all along. If I simply just would have did nothing, waited for this day, took my profits there, and then, did the same exact thing, conducted myself well with this, and then come back to high probability price action, wait and be patient. Okay, patience is 90% of success in trading. All right. And if I simply just stuck to that early on, I would have really, I really would have reached a lot higher heights a lot sooner than I did. But not to say that it took too long, because it didn't. Okay. It was about 3 years, which, I mean, if that sounds long to you, I don't know what to tell you. That's very, very reasonable in my eyes. But moral of the story is, it's the same exact thing you're hearing from every other quote-unquote influencer and whatever else. Is patience, patience, patience. It sounds so simple. It's the simplest solution ever. It really is. And the hard part is applying it consistently, which 90% of people cannot do, and that's why 90% of people do not make money. But if you apply the simple things that you're being told, which this just comes back to, just take a step back and realize that the real success and keys to the markets are right in front of your fucking face. It's right in front of your face the entire time. Everything that you need to know to be successful, you already know it. You just won't apply it with consistency, and that's why you will never amount to profitability unless you hone in on the simple things that are being told to you. Okay, it's right in front of your face the whole time. And whenever I came to that realization, man, I was fired up, and felt so freeing. And then I applied it, and then I was like, oh, wait a minute, what if I lose this trade, or what if I lose this account? What if this happens? What if this bad thing happens? And I was like, wait a minute, I took a stand, and one of the days I was like, listen, how about this, motherfucker? How about you ask yourself, what happens if you follow your plan for a week? What happens if you stay disciplined and patient for one simple week? What happens if you do that? What then? And once you switch your mindset from a negativity based to what I just said there, then all of a sudden things become a lot easier and open up to you. All right. Tay Squeeze, yes. Monday through Friday, 9:20 a.m. every single day on Discord Live. Yes. And the PM session as well. So we're still respecting this gap here, and like I said, we have a small crack in correlation. We have NASDAQ running up and gunning for the highs. Okay, so Nasdaq was able to sweep this previous hour high. So when I say previous hour high, it's very, very simple. So we're in the 11 a.m. hour, and this here was the highest high that the 10 a.m. hour created. So we come up and sweep that. That to me is significant. Okay, even more so significant because ES is nowhere near this high here. Perfect. All right, Tay. I'm looking forward to working with you, and I very much hope that you find what you've been seeking. Man, I just like I'm sitting through this price action. I really want to see this displacement to the downside, break this low, and so like all right, let's compare and contrast here. So we trade down here initially, displace, and we take this small swing though here. Us trading below this swing low here would be hold a lot more significance to me because it's an intermittent term low. So when we drop down, trade into the fair value gap, we create a swing low. We create a higher swing low to the left and a higher swing low to the right. That is a fractal intermittent term low. Okay, these 3 swing points. And if we trade below that, that is an upset in bullish order flow and bullish market structure because we're breaking an intermittent term low after we have an SMT divergence, which obviously adds to this being taken out. But, you know, as long as we're still consolidating and turning sideways, there's nothing for me to engage with, right? So my thing here is we're definitely going to have some unfinished business heading into the next macro, which would be the lunch macro. So I would not be surprised to see a run within that hour. So in that case, honestly, I'm just going to keep this rolling. By the way, guys, please, by all means, if you got something out of this, you're in here, you learned something, which you certainly would have if you were actually paying attention and your ego was to the side and you're actually listening. Go ahead and run up that like button, okay? So we have about 60 viewers and only about half of that like. So, yes, I trade the lunch macro, absolutely. Now, stick to this one rule of thumb, okay? Lunch macro. The only time you ever want to consider trading it in the slightest is if we have some type of untapped sell side liquidity pool or untapped buy side liquidity pool. All right. So if you have any type of untapped key array or pool liquidity and you're heading into the lunch macro and you get a real like displacement in price, then that's absolutely what you want to be trading it. Okay. Obviously, if it fits your plan and risk management. So yeah. So yeah, I would definitely anticipate Nasdaq to really drop here, and I'd like to see if ES can really just slam below this intermittent trend low. Now the question here is, are we going to get some type of form of time distortion? Which, you know, don't get confused. Time distortion is just a very, very fancy way of saying we may consolidate. This 5-minute time frame. Just look how unfavorable it looks on the 5-minute chart. Yes, Alan. Once you get in and you can see it, and you get so close to it, there is no turning back. Okay. Uh, in a space like this, if you can rarely see it and you see the potential and you see these things repeat, I simply cannot see how anyone can just walk away from this and just not continue the journey. So notice what happens. Notice, all right, listen. Notice what happens when you don't try to be the guy that picks the top. Like I was speculating and trying to see if the 1050 to 1110 macro will perform in my favor, and we'd be seeing some type of reversal in the direction of time-based liquidity. But then it just slams above new highs. Okay, I need very very significant obvious signatures to perform for me to take any type of shorting setup. I can't. It's not just simply, oh, okay, we had a 1 minute market structure shift and here's a Fairway gap. I'm gonna go ahead and short that. Okay, that's foolish. That's idiotic, and that's probably something I would have done in 2018. So that's not happening here clearly. And I'm very very easily able to filter out low quality setups. And honestly, that is the best possible skill set that you can obtain as a trader, and that is filtering out low quality setups. If you're able to do that, it's going to be a lot easier for you to navigate these markets profitably. Ravi, yes, I do live streams every single day, starting at 9:20. Unless there is 8:30 news, I'll start around 8:20. But yes, live streams on Discord every single day. All right. All right. So I like how we ran above the consolidation high here and we're displacing. I want to see if this is going to continue. Remember, we're looking at this intermediate term low here, like I said. Let's see it drop down below that. So let's see if it'll cooperate for us here. There we go. So, when we're looking at displacement, I want to see it, really be obvious. We all see it. We're all starting to look at, oh, wait a minute, it could reverse. The only time I consider trading the launch macro, I already explained that. So we do have that. So it is a potential for us to really do something by that time. Am I looking? Yeah. Listen, and I already said enough about the Discord. Like, I'm not trying to sit here and continuously talk about it, but yeah. Anything you need to know, I put the pinned link in the comment section for you guys. All right. But anyway, back to the charts here. Understanding and looking at from what's Giason. Good to see you, by the way, brother. Heading into the lunch macro, I understand that we've really done a lot of work to the upside. We have a deep premium priced in. Okay, we're forming an intermittent term high. All the buy stops have been exhausted. Absolutely. We have a trend line sensation left behind. We have time based liquidity, right? And we have an SMT divergence. So uh, now notice how I said SMT divergence last, because that's really the last thing that I consider. And it's just one added confluence. But anyway, with all those factors, really I'm just would prefer the short side heading into the next significant time of day. Notice how I said heading into the next significant time of day, because really without time, I don't exactly have a real edge. So time is like my superpower, right? References to that. Do I consider new day opening gaps and price action? Absolutely. I hold a lot more significance on new week opening gaps, but new day opening gaps certainly serve as a level of fair value for larger funds, and yes, is drawn to like a magnet. So in this case, like I don't really care about new day opening gap today, to be honest. But let me reset my price chart. Yeah, like too many volume imbalance. I really don't care, but I think, yeah, here's new day opening gaps. We'd extend that out, and we just reference this down here as a magnet, right? So it's very far beyond where we're at right now. So yeah, as I was explaining, should we get the proper signatures that allow me to enter the marketplace short, I would just simply look at this trend line sensation here, and at the very minimum, look for this low to be tagged. Okay. Now, everything that I'm saying right now, it's really just fighting against what I really want to see out of these marketplaces, and that is bullishness towards. Let me just show you guys one more time. Towards these highs right here. That's what I really want to see. That's what Geekay the trader wants to see. But what I want to see and what the market is poised to do are two completely different things. And this is something that I used to wrestle with on a day-by-day basis. And just understand that you don't always have to impose your will in the marketplace. Adapt to what it's showing you, and that just opens up a better world for you. All right, so now it's like, oh man, wait a minute, it is Friday the 13th, by the way, so be careful out there, guys, today. And certainly be careful in this marketplace here, because you're gonna lose your fucking ass if you try to excuse the language, if you try to force your will and impose your will in this, certainly, okay, more than any other day. Why did I not long 10 a.m.? Well, sir, I believe you have not been in the live stream for a significant amount of time. So I explained all that in the earlier portion, and told everyone where price would go. So Cutter, listen, I know 1,000% certainty you're not the only one. There's a great deal of people in the same boat, but listen. Take it for what it is. Okay, it happened. There is no, Back to the Future type stuff. Take it, learn from it, refine the mistake, and find a solution. Okay, that's all you can do. And the only thing there is putting one foot in front of the other. No backtracking, no staying stagnant because of one mistake. All right, there you go. But yeah, like I said, Cutter, like even people close to me, family members, I've seen it firsthand. We're gonna have an interruption here. There's my baby. All right, there we go. Mom's taking care of her. Apologies for the interruption by my daughter, guys. But anyway. Cutter, where was I? I can't lose my train of thought, because what I was going to say was very, very important. Yes, the number one thing I learned firsthand from even those around me, okay, attempting to do what everyone wants to do realistically is do something like this. The more times you try to push forward when it is not warranted, and you try to push forward in the wrong times, the further you're gonna get set back. Okay, so uh, I mean, really, just the only thing that I can really like, the best advice, piece of advice I can very like really just give to you, it's very simple but powerful, is just really like bring yourself out into the light, bring it all out there, be honest with yourself, and identify what exactly sends you into that tilt mode, what exactly puts that tick in you that makes you overtrade and do these things that you shouldn't do. What particularly identify, only you can do that. I can't. Identify exactly what sends you into that mode and eliminate it completely. Do everything in your power every single day. Don't procrastinate on it. Okay, if you have to, just repeat to yourself over and over again. Do it now. Do it now. Do it now. That's all I can say to you, and that's the only thing you really can do reasonably to fix that type of thing and reach profitability. But Giason, take short. Man, listen. If only I was the guy that tried to pick tops. That's never gonna be me. But what time is it here? Okay, it's 11:36 a.m. I'll give it about 14 more minutes. So in about 14 minutes, I'm gonna start taking price action a little bit more serious and potentially take a trade for you guys to end out this free live stream trilogy that I did here on YouTube, and then I'll revert back to my man cave in the Discord and continue to do my thing silently with them. Sir, just about to close the church and call it a week. I mean, honestly, I couldn't blame you for that. I mean, that's a very very good move on the chessboard. For anyone looking at price today. So if you're like Zero, assuming I'm saying that name right, apologies if I'm not. If you're like that person, then I think that's a very very good move. So obviously I'm staying on here for a bit longer, and I know how to conduct myself. So um, but sometimes if you know yourself and you know that if you're gonna keep looking at the charts, that's gonna make you take a trade. Well, I would advise you to just simply close your laptop and go on about your day and do something else that would distract you, right? So a lot of times, simply just putting the ego and pride to the side and just calling it the day or whatever else you got to do is very very beneficial, especially in a long term aspect. Because whenever you really do something like that and you follow your rules, you do that discipline for 1 week, that really gives you momentum into the next week to do the same exact thing because it feels good whenever you follow the rules and you directly benefit profit wise from that. It feels very very good. Okay, and you'll want to keep doing it. Alan, yes. Be careful though. Don't please do not waste your money with the discount prop firms because you're opening yourself up to like a chance of them like closing down or something weird. Okay. Alrighty, so yes, we did have a run on buy stops. We did create a fractal intermediate term high. Now we are beginning to displace from this bearish order block, or more specifically this one. So you extend that out. This is the largest one, so that's really the only one that matters. We have short-term sell stops resting below here within the range, and then terminus is going to be down here. All right. Now, as for Nasdaq, doesn't look as clean, or ES doesn't look as clean, but we're going to see what we do with this 1 minute gap. Like I said, I'm not the guy that's going to be trying to pick the top here. I'm sorry. And also considering that we're 11 minutes prior to the macro. But what we have here is fractal intermittent term high formed. We have the SMT, so this high was not engaged. So we have a run on buy stopped in the form of previous hour high on NASDAQ, and then we fail to do so here on ES. All right. So I'm going to extend this forward because here's our version gap that we continuously keep trading through. Oh yeah, Ravi, I completely agree. Like, I mean, really just one setup per week. When you really strip it down and simplify it, like, really only just one setup per week is really all you need. And that's what I was explaining earlier. A lot of people lose themselves in price action like this, lose a lot of significant equity. Okay, it's, I'm sounding like an open book at this point, but listen, it's the truth, and this is the real leading cause of people not becoming profitable, and it's why so many lose their accounts because they can't conduct themselves through days like this. And by the time they get to that one setup of the week, they're like, "Oh man, dude! Like if I just stuck to that setup, took that setup, literally closed my charts and called it a week, and I did that over let's say a year, I would have a lot of money." So it's about that paradigm shift and changing perspective and looking at things from a different light rather than just your own. Because typically, when you're only looking at only your perspective, you're not really seeing things that you should be seeing. So that also aligns with putting the ego to the side and being willing to learn and adapt. But anyway, I know you guys really want to see a short setup right here, and I know you want to short it if you haven't already. Um, like I said, there is no signal unless you physically see me take the trade. So obviously, I'm not interested in selling this, and then you see it completely just disregard this up close candle here. Alex, I'm glad to have you as well, brother. You just took the loss on 4 mini shorting. I mean, to be honest, I don't see that as I would say that's good that you said, oh, minis. Oh, I was taking that for micros. Okay, so you took 4 contracts on that. All right, so yeah, there's nothing I'm gonna say on that because I wouldn't endorse that. Hopefully that was with the fun of the count or demo because micros. Okay, all right. So in that case, I could say you did well because if you traded micros on this and you understood the risk, especially what I was saying, and taking that setup and you scale down, that's a good thing. So good. Amen, amen. That's the beautiful thing in waiting, brother. Um, patience opens up opportunity. So, um, you know, like I said, it comes down to not picking tops. I don't care for picking tops. I care for finding my model, and that still has yet to be seen. So, the sidelines we remain. I've never had a problem with being on the sidelines, even if I have 1,000 people watch me. I don't care. Um, if I personally wouldn't sit here and trade it with my live funds, why the hell would I be endorsing someone else to trade it? Okay, a lot of furus do that. I don't understand why, but it is what it is. So yeah, honestly, obviously, it's I don't really want to say it now because it's very very apparent and obvious that it's going to take this high, but like I was going to say, a little bit too close proximity, not expected to just spike above. So um, as for Nasdaq, kind of just still moving sideways here. Now, listen, guys, the beautiful thing about trading is I can say one thing, but that can change very, very quickly, and that's just trading for you. To be honest, day trading specifically, things can change very, very quickly. All right, so yes, I want to see this high ran before anything, to be honest. It's 11:44 a.m., so I'm going to give this thing 6 more minutes, and like I said, we're going to speculate. And if we don't see anything significant happen by, let's say, 10:05 a.m. or p.m., then, we'll just pretty much pack it up and just anticipate the lunch to be, continue the uh, subpar price action that we've seen. Ah, man. All right, so we just poked above that high there nicely. Beautiful. I saw many I saw many people trading in the last hour before 12 p.m. lunch and losing. So I guess you're talking about 11 a.m. Uh, in my Discord, I always endorse 11 to 1 p.m. Typically is going to be your lowest probability portion of the day, and is typically whenever I kind of tune out price action more so. But like I said, the exception to that is whenever we trade that is whenever we have an untapped key level or more specifically pool liquidity. So in this case, do we have untapped liquidity? Absolutely, yes we do. Down here, time-based liquidity, and here. And how many times has buy side been ran today? Looking at ES, how many times has buy side been ran? And how many times has sell side been ran? Sell side has not significantly been ran since the 9:30 opening, and we're over here hours later, and all we've done is take out new highs. Okay, we haven't taken out a single significant low since 9:30 a.m. since the markets opened. Dre, good to see you here, brother, and thank you for that message. Man, there's this nagging fly, and I'm getting ready to go grab my fly swatter. Let's see how much price action I missed out on. Man, I missed out on so much. So I like how we grabbed this high. Let's check out NASDAQ. Okay, NASDAQ hasn't taken the high, but when it comes down to it, these highs are just way too clean. So still, once again, I'm not looking at this as a significant top. All right, so anyone that, may have taken this short here, because I know a lot of you are in the comments like wanting shorts. Uh, like look back on it here. Obviously, you can't say I'm just saying this in hindsight because I was, saying this real time. But like looking back on it, watch the 1 minute fair value gap that was formed here. Okay, we have the intermittent term high, we have the SMT, all the stuff that would maybe suggest a selling setup. But what has price done prior to this 1 minute fair value gap? All it has done is move sideways since what? Let's see here, 10:45. Almost an entire hour we move sideways, and then you see one little displacement in price in a fair value gap, and you think all of a sudden it's just going to deliver right in your favor. Come on now. Especially, I mean, I'd be a little bit more understanding if it was in the macro, right? But it wasn't. Okay, so in this case, that's why I would not be shorting that because what I just explained there. um, let me see here. So as for trading after the lunch hour, I'm Abisalom. I'm assuming I'm saying that wrong, so apologies if I am. But am I gonna be trading after the lunch hour? Probably not, just because on Fridays, like, don't get me wrong, there has been very, very clean PM sessions on Fridays that I've traded, but especially when it's traded like this and it's a Friday going into a weekend, a lot of times the market kind of falls off and doesn't do too much. So a lot of times I like to call it a session after the New York session. But yeah, I think. So yeah, we're 5 minutes in, almost 5 minutes into the lunch mark already. We haven't done much, so that's not too promising. Things look a little bit better on ES, which is kind of surprising because typically Nasdaq has the volatility we're seeing on ES rather than Nasdaq kind of looking like this. Look at the 5 minute chart on Nasdaq. I mean, this is just absolutely hideous. And like I said, if you're a 1 minute chart trader, please just zoom out every once in a while and understand that the 5 minute looks like this, and then you look at the 15 minute, and it looks even worse. So on to ES. Okay, we just placed above previous hour high. We're continuing to do so, and Like I said, if I'm going to be supplied with some type of edge to actually take a real trade, then really the only thing I can logically do is short after a bunch of certain signatures really come together and time aligns. So like this right here, I mean this is just way too obvious as engineered liquidity. So when the time is right, I would like to see us offset that and at very minimum trade below this entire consolidation. All right. So even if I was bullish and I was trying to take like some type of buying setup, uh, like I said, at very minimum, I'd like to see this be ran out before I look for some type of buying setup. So either way, I want to see us trade down until we reach this low. Aaron, listen. The answer to your question lies exactly within this entire live stream. So, rewind, rewatch it, whatever you gotta do. The answer that you're asking is gonna be found within the stream, and I filtered out countless low quality setups, doing the exact thing I was doing in the stream. So, yeah. So Nasdaq was finally, very very slowly, but finally able to poke above the high. Like I said, I didn't like these highs here. It's just too artificial. And we finally poked above. We have ES kind of just flatlining here at this point. I mean, it's literally just moving side by side. And we have these highs left intact up here. So I told you guys, if we don't see anything significant by around 12:05, then I would just, kind of dead it and understand that the lunch macro is not going to do much. So we're going to wait until that exact time on the tick, and then from there, we'll look to see what we can do. All right, there we go. So ES poked above this small consolidation here, so that's what I like to see. As for NASDAQ, just still continuing higher here. All right. This has to be one of the most inefficient run higher I've seen in some time. Let me go ahead and map this out. All right, so we're trading up into this old sell side imbalance, buy side inefficiency. All right, so with that said, you guys know the deal. We reference the midpoint, high, and the low. And looking at ES, let's see if we're driving up into the same imbalance. Okay, right here. Actually, I changed my mind. I'm going to go ahead and map out this one instead. So as I said, as soon as I started the stream, like a lot of people would try to, look for TGIF, but we understand the daily draw and liquidity. That's really the magnet. That's really just like propelling price higher. Now, is it something that I want to engage with, even though it was directional? Absolutely not. I mean, we sat through this entire thing today, and it's just been like very, very just sluggish and just not typical we expect out of price action. So I like this poke above here, and what would really entice me here is if we get a large collapse below these two series of up close candles. Okay, so that would set the stage for a change of the state of delivery within this premium imbalance and above the highs. So we're in a very, very deep premium. These highs are obviously the main draw. Honestly, I'm not too confident in these being hit today, so I would just look for this next week. So until we reach these highs next week, I'd remain bullish on ES and NASDAQ. And, same thing for NASDAQ. These highs right here. Okay. I am baffled by this 5-minute time frame right now. So one tick below this opening here, that's all that's needed to turn this thing into a change of the state of delivery. Okay. We don't need a body closure. We don't need none of that other stuff that you're hearing. All right. All you need is one ticker below here. Now, does that mean absolutely with certainty that we have a setup? No. Okay. We need other factors to be considered along with the change of state of delivery. So it's almost 12:05 here. Alrighty, so there it is. We have a displacement after obviously taking out the highs. We're in the upper quadrant, upper 75% specifically within this premium gap. This sets the stage for the change of state delivery trading below here, like I stated. Same thing for ES. I don't like how we're instantly rolling up here. In this type of scenario, I want to see us remain heavy towards the consolidation lows like I mapped out for you guys. So basically, from what I'm saying, you can draw a conclusion that I would like to see price remain heavy until at minimum we reach this low right here. So we can go ahead and do the same thing on ES. So lows down here, okay. Like even with initially the stage being set, or so I'm speculating, this still like this doesn't look like an efficient beginning of some type of sell model. I mean, how it trades down like this and then instantly rolls back up. I just don't. That's the type of thing I don't like. Okay. So basically what would entice me further is I'm going to watch this 5-minute gap, and if we can roll past this, okay, I would reasonably look to expect a run into the consolidation here. Now, with that said, the reason why I'm saying that is because we can easily just be using this fair value gap as reaccumulation and then send this thing higher up into this premium gap up here. So, you know, whether it does it or not, that's none of my business. Because listen, me longing this with all this below us, that is not a part of my edge. That is not as what made me money years back and up until this day. So with that conclusion, I'm not going to sit here and trade outside of what I know. All right. So I'm going to let it do its thing. But if it disregards this fair value gap, I certainly can look for the low here. All right. Yes, Zach, I like your thinking there. In a good world, that's what's going to take place for us next week, and we'll be able to execute on that. So we're going to find out, which we probably will. So, like I said with the sell program, this up close candle here, high probability bearish institutional order flow would tell me this should be held. We should leave this gap open, absolutely held open. Hold this up close candle and then propel us down to the lows. Okay, so in this context, if I was really looking to take a short, which I don't currently have the signatures needed to do so, but if I was, I'll be looking at this opening, extending that out, and anticipating the bodies remain below that. Okay. And then, yeah, ES is already disregarding it, as I would expect, in this swamp of price action that we're currently within. So currently body still remaining below the up close candle here, body here. So, I mean, it's still valid, but ES, doesn't really look as promising with how it's trading. It's leaving a volume imbalance, and it's just very low volatile, to be honest. So, if it remains this way for the remainder of the day, then next week we can we can really expect Monday to get the ball rolling, and the Discord members and I will probably be taking, well, not probably, we will be taking, some type of trade, in the direction of what I was calling out on the daily time frame. Come on, NASDAQ. Show me what I want to see. So yeah, like as soon as I see this, like it could displace, but as soon as I see this, like this is just not something I would favor. So like a body above half of an up close candle, and it's not. I'm not saying okay, this is an order block. I'm saying from a bearish institutional order flow standpoint, that should not be closed above. So you see it close above there, and now it's actually displacing. So I guess the good thing to take away from this is that we left this gap open. So in all actuality, us leaving this gap open, that there is the real bearish signature that we need. So the body remained above, a lot more above than I'd want to see it above this up close candle. But all in all, it still left this gap open. So that there is valid. And let's check out ES. All right, perfect. So same thing. And then we actually just displaced completely and entirely through this gap here. So this should set the stage for a nice run down into the consolidation low, like I've been telling you guys. Let's see if it can complete the run now. Okay, so we did actually pierce the technical first low of the consolidation, but I want to see it continue until it spikes down into here. Okay, same thing with ES. It took that first initial low of the consolidation. I want to see it get down below the entire low. Yes, so Zach, understanding that FOMC is next week, that makes it a lot easier to use the economic calendar as a roadmap and navigate when exactly are we going to be making money next week. So that's actually good to hear that we have FOMC. So, I mean, it shouldn't be stuttering like this. It really should just slam right down there. So we're going to wait for that and watch and see this low being ran. So I can't stay with you guys too much longer here. And, if we're able to complete this move down to the consolidation low, then... Oh, and actually, okay, hold on. Wait. There we are. So there's NASDAQ piercing the low. And, not particularly an entry point that I liked. So in that case, obviously, my model did not perform. But inevitably, here I am again telling you exactly where price will go at the optimal time of day. In this case, after the lunch macro set the stage. So we have this delivered. I want to see ES get down there as well. So the move certainly is not completed until ES does the same. How long was delay? I don't think there is a delay on my stream. I mean, if there is, correct me if I'm wrong, but I don't think there's any delay. So really what I want to see here and what I'm speculating prior to reaching this low, which should do very soon, I was look at the 5 minute candle remain relative in this vicinity. So around midpoint of the consolidation low, which is our near term draw and the high. So if we do that and it wicks up into some type of 5 minute imbalance, I would view that as reaccumulation of shorts and then finally send it down below here. So that's what I'm pretty much just thinking right now. And then as for Nasdaq, like I said, like yes, it hit the low, but where it stands now, this is simply just my near-term draw, and I'd like to see it continue at the very minimum to this rejection block. Okay, you see these two clean bodies here. There is liquidity, a great deal of liquidity below these wicks. But when it comes down to it, these two clean bodies right here, that is retaining and holding the bulk of the volume in the form of liquidity. So this right here would be a very key price point to look at. So I'm just waiting to see if we can complete this move here. And I believe we're going to be opening on a new 5 minute candle right now. So one of two things are going to happen. It's going to wick up into here for reaccumulation and then look to send it down to these lows, or it'll just spike straight down. So we'll see which scenario here will play out. So I think it's going to take the route of just spiking down to the sell side. Because, when it comes down to it, like it could trade up there and give us that entry point we want. Or, it can stick to the script, which is, it creates the low, trades up. Here's buy side of the curve, comes down. Here's sell side of the curve. Not particularly a real good reason for it to trade back up into here. If it really wants to sell side liquidity. So if it does trade up in here, look, might do right now, you'd want to see it respect the very low end of the imbalance and act as institutional order flow entry draw. So go ahead and map this out. Okay, so notice how it tricked us into thinking it's going to get up there and then it fails and, trades back down. All right, so NASDAQ actually did get up into there, so beautiful. So we have a breaker right here, high, low, higher, high, down close candle. Here's a breaker we're trading up into with the Fourier gap, and I view that as reaccumulation to send us down into the targets that I mentioned to you guys. So the rejection block down here on the 15-minute chart that I mentioned to you guys, right? So ES failing to get up to that gap while NASDAQ is. I very much so view that as a form of SMT divergence, all right? So really, if you take your range here, okay, you're going to take the 10 a.m. manipulation low to the high, okay? We're still on a premium, and we're seeking discount rejection block. So ES showing relative strength by failing to get up to this 5-minute gap. Okay, so it should keep that open now and just spike lower down to the low here. Beautiful. Come on, ES, make my day. Get down there. Man, as much as as much as we had this price action here today, this is the best thing we got all day. But even then, it's still not moving as fast as we would typically look for. But all in all, the draw remains the same, and it's down here. Okay. And then the rejection block down here as well is what I'm calling out. And beyond that, can we tag the 10 a.m. manipulation low? I believe so. I'm anticipating us to trade down in here. All right. I think that's indecisive here. Okay, please note that it is we're smack dab in the middle of the lunch hour. So, let me look here. Yeah. So, guys, I believe and I know so that I have completed what I wanted to do here. This was the third live stream I gave you guys in the free YouTube live streams. The 2 live streams prior, I actually took 2 successful trades. So we took 1 trade in each stream, and both of them resulted in about 70 handles. And yeah, that's that. So this trade here, or this day here, obviously I would have preferred to take some type of trade for you guys. As I close up here, just keep your eyes down here, and then ultimately down here. That's what I'm looking at, and I would anticipate the PM to continue us down into the lows and lows. And that's pretty much all I can frame right now. So I think that's going to be it here for the stream. And I believe I was here for about 3 hours now. All right. And you absolutely learned a good deal of stuff if you really paid attention and just, set aside whatever, you thought originally. And yeah, so it's time to go back to my man cave in the Discord, and that's where you can find me. And whether I ever do a public YouTube stream again, I mean, probably maybe like at the end of the year or something. But other than that, I appreciate you guys for all tuning in. And until next time, I'll see you.